Okay guys, we're going back to the answers hub this morning, but the first answer is actually for me. Why? Because we all know Scruffy likes a coffee, and on that board she's wrote no sugar. It's actually not true.
Yes, it is.
It's Nescafe with 2 sugars.
I don't have sugar.
No, this is the Scruffy
That was
show.
a note to you.
It's a note to me. Well, a note to you is never mind your legs are tight. Go sort me a coffee out. Later on, the answer will be medical advice after I've wiped the blood off my nose and got up off the floor, because she's a vicious little sod. As is a lot of people out there. But let us fire on. The question is from Alan. Little salute to you, my kid. And it is, in the way of the scruff, from one of the modules you saw, daily ATR is a trading arena, but in recent markups, you don't use them. Is there a scenario? Right, okay, let me kind of clarify that. The modules in the scruff are all the elements you need to put together. Now, an ATR trading arena is the maximum width that the market will run to, and then you've got your trigger arenas where you really just want to work. Let me show you an example and we'll go from there. Let me just pull in a current sheet that I'm kind of looking at the moment. Let me just widen that up. All right, so this is a standard chart that's marked up. Now, your trading arena is between 2 fixed points. Okay, this is where you would be executing your trade, and it's normally where you're working. Now, if you've never been on a chart before, you kind of need to know where the parameters of that chart will work. Now, I trade the same charts day in, day out, so I roughly know how far it can stretch. Why? Because I see it 1,000 times and I see it every single day. But if I come to a market that I don't actually understand, I'd want to know why and how it's going to operate. So if I look at an hourly chart, for argument's sake, I would want to see where it started. Now, on this particular platform, which is my web trader, the day starts at 12 o'clock. So it will be this candle here. Okay, that red one there. Now, I need to know what a daily ATR is. So if I come out to the daily and I flick on, just switch these indicators off because I only need the ATR at this point. Go to the average true range. Daily average true range is running at 66, 67 pips. Okay. So what I would do on the hourly is this, to get an idea of where I'm looking at. So just get a measuring stick and just pull it up to 66, 67 pips. Doesn't have to be cock accurate, but just there or thereabouts. And I can see where it started. It opened here. So put a nice big thick line that I can recognize up there. We'll just do this one in green just so that we can see it. And we'll have it as a solid line. Pull this down to where it started. Put that there. Okay. And then I'll give myself a little bit of a buffer zone. Just like so. Pull that up. And then I'll just put a couple of black boxes in here. Or well, anything you want. You just so you can recognize what that is. That is your pretty much maximum trading arena today. Now what this is representing is something that's very simple. All it means is if the market opened and then never looked back, that's roughly about as far as it can go. Likewise, if it went down and never looked back, that's roughly as far as it can go. So this is the maximum trading arena. But if I'm going to trade, I'll trade between these 2 points. So from there to there. So if I'm going short, I can sell there, get out there. And I know I've got plenty of room to get my trade. But if I'm going short here, and I'm running into this, the chances are it's going to turn somewhere in this market or in this area. So I would then need to be looking to get out or let the market come a bit higher to come back into it. All right. If it breaks through that, you're probably on a full-on trend day and just go with it. But until it breaks that, it's just going to bounce left, right, and center. So that's one of the reasons why I use it. And that's it, really. It's just everything we do as a trader is about trying to boil it down to its smallest component within common sense. Now, in this industry, there is zero common sense. I see that all the time, and it seems to be getting worse, and it's why I'm stepping back from public life a little bit. What you need to do is actually just understand the mechanics of the chart. And an ATR is a good way to do that because it will show you the stretch points in a common sense manner and then just work between those 2 points. Hope that helps. Catch you all soon.